Hello and welcome to Investing Confidential. Whoa, big news today. The morons in the Congress passed a bill, budget bill. I mean, the budget bills, as it stands today, impossible that will pass the Senate. Impossible. It's going to get ripped apart, ripped to shreds. But as I spoke about with the tariffs, this budget bill is meaningless. No matter what's in it, it doesn't address the problem. It doesn't address the problem, and I'm going to keep showing this. Don't subscribe to my channel if you don't like this. But this, if you are an investor and you don't watch this every week, take a look at this, understand this. You can just go. This is public information. There's a lot of information. I'm just showing you a small part of the chart. This is all that matters right now. Okay, the S&P is a joke, and if you still own it, wonderful. Keep riding it up. But the average stock's not going up. You're recovering a little bit of what you lost a few months ago. But this is really what matters. 37 trillion is around the corner. And these morons in Congress, okay, do you think they address the deficit? No. The deficit is going, in that stupid bill, they say the deficit is going to 4 trillion. 4 trillion. I'm going to show you all the details on this, but this is insane. This is absolutely insane. And there's nobody that wants to do anything. Look, at the end of the day, the current administration, Trump, he's trying to cut taxes to the lower people, lower middle class. He's trying to cut taxes. He's trying to do all these things. I understand that. He also realized he's got to balance himself, because if he doesn't pass his bill, the opposition party, Democrats, are gonna defund him. They'll let the government go. That's what they want. See, I'm not defending either party. Nobody, whether Harris, no matter who got elected, they weren't going to address this. They weren't going to. So what is going on today? If you look at the bond market, the dollar is telling you everything. I'm going to talk about it in a second, but these are the things you have to watch. Again, when I talk about a sideshow, this budget is a sideshow. What really matters is the bond market. What really matters is the U.S. dollar. What really matters is the deficit. What really matters is the debt that we have, the interest, the $3 billion every single day that goes to pay interest expense, your tax dollars, and money printing. Which, what does that lead to? Inflation, like we saw in 2022. That was monetary inflation, folks, and we're still suffering from it. Okay, so let's get down to the nitty gritty, and after this, I'll address how this is going to affect the markets. But let's get down to the nitty gritty. Okay, look, the U.S. is a disgrace. Okay, right now with this bill, it's even bigger. We have the largest budget deficit as a percentage of GDP in the world. We are a third world country financially. We're Brazil, we're Argentina, we're we're Russia, we're from a financial, we're bankrupt, folks. This is a disaster. Look at it compared to other development. Look, the UK is no better. Italy's no better. France is no better. Germany, I'm going to talk about Japan. Japan's in a basket case, okay? An absolute nightmare. But this is what we're dealing with. These are the numbers. And, I know some of you young people, it doesn't matter. The stock market keeps going up. But you probably own Bitcoin. You're probably happy. But Bitcoin is going up for a reason. And these are the reasons. If you're bullish on Bitcoin, these are the charts that you need to watch. Because these are the bullish Bitcoin charts. Okay, look at this scenario. I talked about, again, the number 4 trillion. Folks, they're not trying to hide it. These are Wall Street projections, but they're not trying to hide it. Nobody's trying to hide it. This is a disaster, no matter how you slice it. Now they're only telling you 3 trillion, but in the bill they talk about 4 trillion. And this dip in the deficit, this is an absolute joke. There's going to be no dip in the deficit. This is Wall Street bullcrap. But in the end of the day, no matter how you slice it, they're telling you the reality, but no one's paying attention because the S&P is not falling, but the bond market is. Okay, and here we go. The 10 years above almost 4.6%. The 30-year bond, which is now what everyone's going to focus on, okay, is above 5. It's approaching the highs of the inflation scare. Mortgage rates are over 7%. The real estate market, folks, is collapsing and has collapsed. I just looked at real estate in the New York metropolitan area, in the most exclusive suburbs that I know well. There are houses sitting on the market, not selling. There's plenty of supply, not selling. Prices being cut. I haven't seen that in 4 years. Okay. Again, the bond market's telling you that this bill, in its way it's situated, is a nightmare. And by the way, the bill's not going to get better. It'll get much worse. And the bond market's going to tell you that. And remember, what I'm showing you today, okay, this whole idea of the budget and all this, it took down the government of the UK. It took down the government of Germany. It took down the government of Korea, Japan, Spain. Almost took down Macron, but he survived. But he's wounded. So if you're around Trump, you got to be worried. This is a president killer. Okay? And this chart, folks, I'm going to explain what this is. This is the red flag of all red flags. Okay? We got a rising 10-year yields. And we got weakening dollar. Now think about this for a second. Take a step back. When we had the big inflation scare and rates went up, what happened? The dollar strengthened, right? Oh, wow, higher rates, people are going to jump. Great, wonderful. As we saw here, this chart doesn't go back far enough. But trust me, when rates go up, usually the U.S., especially in the U.S. dollar strengthens. Well, it's not happening right now. This is a red flag of all red flags. We've got rising rates and a weakening currency. This is emerging markets. This is Argentina. This is a nightmare. And the problem with this bill, specifically this bill, and all these stupid bills, is they're front-loaded. Okay? They're front-loaded with, tax cuts, and backloaded with spending cuts. So, and what happens is these presidential terms are only 4 years. In Trump's case, he got 3.5 years left. And he's gone. No matter what he says, he's not going to be reelected again. And whatever happens with this bill, the last 5 or 6, these projections, they're a joke. They're meaningless. Every time they're meaningless. They mean nothing. All these spending cuts, they will never be enacted. This is why we have a $2 trillion deficit. We front load the tax cuts. We front load spending. In Biden's case, it's spending. In Trump's case, it's tax cuts. And we backload the things to pay for it. And nothing ever gets done in the backload because these guys don't last that long. This is classic. It doesn't matter who gets elected. You would hope that Trump would get out of this cycle, but no. And look, no matter what happens, the debt burden for us, the American people, is gone. I mean, we're already in uncharted territory. The U.S. And I'm going to show you what our future is, but our future is Japan, by the way. fiscally and financially. But nobody's going to buy this debt. We're going to have failed auctions, or our rates are heading significantly higher. And on back of that, we've got a weakening dollar. Now, you can say that this is going to help, and it will. If we debase our currency, it's going to help alleviate some of the strain on our debt. So this is why, if you're a Bitcoin guy, if you're a gold guy like I am, you love this. This is wonderful. It's not great if you're an American, but if you own Bitcoin, you own gold, you own some hard assets. I wish I could own a copper mine right now, a nickel mine. And, the smart money, these are the derivative traders, they're massively short the dollar. Now, they're going to probably get burned in the short term. As usual, they overcompensate, but the trend is not good for the U.S. dollar. We have broken the uptrend. We're on a downswing right now, and there's no stopping it, and the professionals know that. So here's our future. Okay, I'm going to talk about Japan in a second, but here's what's going to add to the problems in the future. Is Japan is the largest holder of our bonds. The largest holder of our bonds. They own massive amounts of bonds. And as I told you, everything in this, all financial assets have become illiquid for some crazy reason, mainly because the banks are no longer taking risk anymore. Everything's illiquid. So Japan has surpassed China. China's selling. The Chinese think long term. They've been selling for quite some time, and they continue to sell. And Europe, meaning the UK and Japan, keep buying our debt. This is dangerous because Japan bond auctions are failing. JGBs. They can't finance their massive, ridiculous fiscal targets anymore with the negative rates they had, 20 basis points, 30 basis points. They were buying their own debt. It was a money printing machine, and that's gone. I mean, you're talking about, you had negative rates in Japan, zero rates they were just, and it's easy to fund when you have zero rates. You just keep funding it, print money funding it. Well, look what's happened in 2 short years. You've gone from, if this went back, you'd have below 1% or 1%. We're now at 3.67 and going higher. These are the long-term JGBs, Japan, I don't want to curse, but Japan is screwed. This is our future, folks. This is our future. And the other part of our future is what we got to watch out for is what's happening in China. China's look, all this talk about China winning, China's got major problems. Nothing's changed in China. Home prices are still negative. All the stimulus. And remember, this has been, the Chinese real estate market is the reason that GDP went up for 20 years in China at 14, 15%, whatever that number was. Doesn't matter what the number is, but it went up huge. Real estate. That's it. Nothing else. Real estate was the driver for everything. Real estate created wealth. Real estate created consumer confidence, everything. That's gone. This is what you call deflation. This is our future. You want to talk about what's going on with your house? You're all excited about Zillow? Guess what? So are the Chinese. No longer. No longer. Look see what your house on Zillow is worth 2 years from now, and then let me know. Okay? This is deflation. This is our future. In the short term, we could have a spike in inflation, okay, in the short term, but because that's what people are expecting. But now going back to the U.S., University of Michigan, look, all these numbers don't I don't really pay attention to them, but this is fairly good. Consumer sentiment has basically is gone. Consumers, and this is mainly because of the media putting a lot of fear. But the consumer is not stupid. They know what's going. The Main Street. They see what's going on in Main Street. In the short term, they see what's going on. They're very worried because their expectation of inflation is because people have been telling them, "Oh, the tariff wars." Unfortunately, folks, if you're a consumer and you believe inflation is going to go through the roof, I don't think so. I don't think so. I mean, if all you want to buy is imported goods, I don't think so. Our future is deflation, not inflation. And the real problem is that the consumer is negative because the consumer is tapped out. These are subprime auto delinquencies over 60 days. This is bigger than 2020, bigger than the financial crisis. Yes, bigger than the pandemic and bigger than the financial crisis. The consumer in this country is wiped out. And that's why their sentiment is very low. That's why they're expecting, they're afraid of inflation. Okay, here's another view of it. The blue line is University of Michigan. Again, expectations are huge. And in the short term, it's probably going to come to pass. We are going to get probably an inflation spike, I would say. But it's going to be very short-lived. Very short-lived. Wall Street, lying again. The black line is the Wall Street gauge for inflation. Wall Street's always wrong. Always wrong. But this is going to be interesting to see how this plays out. Now, the one trump card, and I call it the trump card because it is a trump card, is oil prices. If Trump is successful to get oil prices back to 50, now, he went over to the Middle East for a reason. That was his first trip. I have a feeling, behind the scenes, he cut a deal with our friends in Saudi. Cut a deal. He had to have. They have to know his strategy, and this is the only thing that could bail him out, Trump, is lower oil prices, which are going to feed into keep that inflation number in check, but will exasperate the beginnings of deflation. But there may be something cut. I don't know. We'll see. If oil prices go down over the next 2 months, Trump cuts some deal, and it could help. It's not going to, in the end of the day, our fate is sealed with the deficit, with the debt, but it could help in the very short term. And, this is the stock market of, going back a few weeks. We've had all these crises. The S&P just doesn't want to go down. Doesn't want to go down. Even today, it opened down, back up again. I don't pay attention anymore. The S&P is a manipulated index. But if you hold it, you just hold it. But you can't get away from the fact that the stock market is always driven by earnings. And here we have the reality. This is a measure of guidance momentum. Positive guidance, negative guidance. Guidance is falling off a cliff, folks. Now, guidance is the future of earnings. Now, what I report today may be good earnings, but if I'm a CEO and I'm guiding to lower earnings in the future, it's up to you to pay attention. If you don't pay attention, which obviously investors are not paying attention, they don't care. This is what happens. You have a big divergence between stock prices and guidance, and I'll buy the guidance every single time. But on the other hand, you got these idiots from the Fed. Again, I don't pay attention to this, but it's good to know. They've got incredibly positive GDP for the second quarter. They're always wrong. Always, always wrong. The Atlanta Fed. I don't know why they're playing this game. But just to know that there's the Federal Reserve is looking for a positive, very, very positive, strong GDP. And if Trump gets that, he's going to wave a flag. But this rally we're having off the lows is just it's just showing you what we're into. So you may not remember the Nifty 50. If you don't, go to ChatGPT and put in Nifty 50 and read about the Nifty 50. This is during the 70s. We had 50 stocks that wouldn't go down for years, wouldn't go down. Nothing else went up. 50 stocks wouldn't go down, until they did. And it was carnage. Absolute carnage. Well, this Magnificent Seven is following a similar pattern. Similar pattern. Goes down, goes up. Goes down and comes back up. And it goes down and all of a sudden, carnage. So carnage is coming. Can't tell you when, but carnage is coming. And where do you put your money? Well, right now, given this budget is a disaster, whether it gets passed or not, most likely it will get passed. It's going to be, if it gets passed by the Senate, it's going to be worse than it is today from the standpoint of a deficit. Gold's going to keep going higher. 4,000 is the next target. 5,000 probably is the next target. Where could Bitcoin go? I've look at one of my videos. I did a quantitative calculation of Bitcoin. Bitcoin conservatively is worth $500,000 to $600,000 per Bitcoin. Conservatively, based on what gold's doing. So there you go. This situation gets worse. Nobody cares. Nobody cares about this. Nobody's paying attention. They say they are, but they're not. The deficit's going higher, significantly higher. And the end game is very simple. It's Japan. When foreigners say no mas, and they start selling, rates are going to go up, even if the Fed cuts, because the selling pressure, because of the illiquidity. And this is now feeding into the real estate market. Real estate is collapsing. It's going to be a 3-year to 4-year fall. And the S&P 500 is following the pattern of the Nifty 50, driven by the Mag 7. There are a lot of people saying there's going to be a recession, no recession. I don't even care anymore about recession, because for Main Street, we've been in recession for 4 years. I say we because I'm following it. It is we, Americans. 90% plus of the American people know that we've been in a bad economy for 4 years. Whether the numbers say recession, 2 consecutive, nobody cares anymore, because the government numbers are trash. They're worthless. CPI, GDP, worthless. I rather go to Middle America, to the southeastern part of the United States, talk to people. That's when you'll find out what real GDP is. Not by talking to some moron from Wall Street or one of these ex-hedge fund idiots on YouTube that are just going to tell you whatever they want to tell you. And that's it. So the big beautiful bill is a big beautiful joke. That's it. Don't matter anymore. Whatever happens, it's going to get passed by the Senate in some way. It's not going to be what it is today. It's going to be worse. So, as always, investors, I'm tired of talking. So be careful out there, and be really careful out there.